All right. Well, good morning, everybody. Welcome to the webinar on international finance, payments, and terms with the Small Business Development Center and a special guest from the Arizona Commerce Authority. So I'm going to start by telling you a little bit about the Small Business Development Center. Maricopa SBDC is part of America's SBDC and part of the Arizona SBDC network. At Maricopa, we have 15 business analysts or counselors, as we call them, in Maricopa County. Two of us are joining you here today. My name is Tom Fulcher. I'm a business analyst with the Maricopa County SBDC and have been with the center for about, I want to say 12 years now. And along with Carol, who we'll introduce in a little bit, am a certified NASBite, they call it a CGBP, so a certified global business professional. And that Carol and I both have different types of experience in international business, and we're happy to be here with you today. All of our counselors have a variety of experience, whether you are raising capital from investors and looking at technology businesses, whether you're a startup, whether you're a very mature business, whether you need to go out and find some capital from lenders, you need to get a loan to buy a building, get some new equipment, or just some working capital to maybe hire people and do some new things in your business. We have a variety of counselors, including a capital team that can help with that. And we have people with a lot of specialties in everything from construction to food trucks to restaurants to every type of business you can imagine. All those services are no charge to you. There are 10 centers around Arizona, so if it just comes up that we may not have the exact expertise you need in Maricopa County, we can reach out to our colleagues around the state and bring in additional people to work with you. We offer that counseling at no fee, and you can submit a request for counseling at maricopa-sbdc.com, and you'll be assigned to a counselor who will work with you on an ongoing basis to help you with your business. We offer a variety of training. You can also find that on the website. This is one of those training programs. Working in the international space, we have a wide variety of training. We just had the U.S. Patent and Trademark Office with us. We've done training on sales, marketing, finance, HR, every topic you might imagine. We also have a variety of resources available, from things like profit mastery to Excel tools that could help you, maybe build out your business a little bit, analyze things. And we have a strong research resources, both in international and others. We have a team in San Antonio that serves the entire country that can do research for us or find existing research. We also have some research tools internally and other tools. So we're really excited about being here for you. And hopefully those of you who are on that haven't engaged with us yet, will go ahead and get engaged with us and we can help you out. So today I'm going to introduce Faith Ritchie. Faith is the Small Business Programs Manager with the Arizona Commerce Authority, and let her tell you a little bit about the Commerce Authority. Faith?
Excellent. Thank you so much, Tom, and thank you, Carol. As Tom had shared, the Maricopa SBDC, as well as the SBDC network across the state, can provide some fantastic resources for entrepreneurs and business owners. So I encourage you, if you have not worked with these people, please reach out to them. You can learn so much. But as Tom had mentioned, my name is Faith Ritchie and I'm with the Arizona Commerce Authority. The Arizona Commerce Authority is the state's leading economic development agency. Currently on your screen, you will see a variety of programs that the ACA supports. I encourage you to take some time, if you are unfamiliar with these programs and resources, to visit the Arizona Commerce Authority's website. We have a variety of programs that are free and accessible to business owners of all sizes. Small business is anything from 0 to 500 employees, so fitting that gamut of small business. There are resources available for you through our Bootcamp Innovation Challenge, Small Business Checklist, and other programs that you see on the screen. I will share my contact information in the chat so you can follow up if you'd like. Here is a quick screenshot of our small business checklist. This checklist program is an online and interactive resource guide to help entrepreneurs and business owners address all those commonly asked questions of local, state, and federal level licensing and permitting information. So whether you are looking to start or grow your business in Arizona, we always encourage entrepreneurs to review that checklist to make sure all of those T's are crossed and I's dotted. Next screen. Next is our small business boot camp. And the reason why we're sharing these programs today, or these are programs you can access and engage with right after this session. So our checklist, you can log in right away and check out, as well as our small business boot camp. Our small business boot camp are weekly webinars similar to today's session. We host them Tuesday mornings from 9 to 10 a.m. They are designed to help our very small businesses of 20 employees or less, but as always, that education is appropriate for anyone who is looking to grow or just learn more information about a variety of topics. We have recorded all of these sessions, well over 250 now. I was talking with Tom before we started, and he had joined us in the way beginnings, but since then we have recorded 250 sessions of a variety of topics and experts to assist small businesses in all aspects of business. Those recordings are available in our content library. And next slide, please. And our content library has driven us to create our Small Business Digital Academy. Now, that content library encompasses all of those 250 plus recorded sessions accessible and available on the Arizona Commerce Authority's webpage. And with the response and excitement of the boot camp, we have designed, in the content library, we designed our Small Business Digital Academy. The Small Business Digital Academy is a 6-week cohort style class that is free for small businesses to participate. The goal of this program is to assist founders to understand their digital and online presence and build their digital capacity. So if you are new to marketing your business online, selling your business or selling services and products online, I recommend that you visit, again, the Arizona Commerce Authority's website. We run a 6-week program every quarter of the year, and we have a live registration link available on our website. So if you've missed a cohort, you will get a notification of when the next one is available. Again, this is a free program as well, and it does connect you with mentors who can assist you with developing those marketing strategies and plans. Next slide. And as Tom had mentioned, I am subbing in for our Vice President of Small Business Services, Robert Theobald. His contact information is on the screen here. But as mentioned, I will put my direct contact information in the chat. I encourage you, if you visit our website and check out those services, that you can access right away. If you have any questions, concerns, please feel free to reach out to us. We truly serve to be a resource for our small business community. So thanks so much for the time, Tom.
And Faith, before you move on, I just want to say, you know, the collaboration between the ACA and the SBDC is a very important one. So as you enter the Small Business Academy on digital, but then you come talk to one of our counselors who helps you through the process. We talked about the many programs you do, the Arizona Innovation Challenge. I know between myself and a couple other counselors, we've had a dozen winners of that over the years. And so you've got a couple of people who have been part of that. I know I'm also a judge for that program, as well as what wasn't on there, Venture Madness, which is, you know, coming up in the first quarter, and applications will be opening soon. I'm the mentor chair and a panelist along with some others. So we've had some winners there. So as you mentioned, I've been at Small Business Boot Camp, as have many of our counselors. So there's so much collaboration. So if you engage, which I encourage you to do in one of the ACA programs, also engage with the SBDC at the same time and get that extra support going through it. But Faye, thank you for joining us today.
Thanks so
Thank
much,
you.
Tom. Thanks, Carol.
And next, we're going to bring up Carol Poole. Carol's a CGBP, as I said, a Certified Global Business Professional, MBA from the University of Amsterdam, and has 15 years, probably more now, in international trade experience, and basically just knows everything soup to nuts there is to know about international and export. So that I'll turn over to Carol, and I'll go off camera for a while while Carol walks you through the webinar.
Hi, good morning, everyone. Let's start it. So first of all, we are going to talk about the method of the payment. So I separated the payment method and the payment term. I separate them because to me, the payment is one thing, term is another thing, because term you can negotiate it between the seller and the buyers. So let's look at one by one. The first one, cash in advance. So that is well known by everyone. Cash in advance is people here called a wire, like the people from overseas wire you something. Or in international trade, a lot of people call it T payment, telegraph transfer. And then this is the very most common one people are using. For example, you are an exporter. You want to sell your things to other countries. This is the best payment you can find in international trade. Means your buyers going to wire all the money to you, like send all the money to you before you even ship the product. So this is the most safe way of doing international trade. You get your paid first before you even ship your product. But this is also the least, I would say, interest payment method people are going to choose, because what if you're not sending to them, right? So there is a big risk for the buyers. Therefore, this is the least popular one for the buyer side, but this is one probably as an exporter, you are you most preferred because you have no risk, or I was very, very little risk for the cash in advance. So the next most secure way of payment, I already talking about that, letters of credit. So there are three types of letter of credit. One is the payment, like after you present your document to the bank, they will pay you immediately. We call it letter of credit as signed. There's two long-term letters of credit, like long-term LC payment. One is 90 days, one is 180 days. So you might want to know, like, how about 100 days, 120 days? That's not option. Okay, so for the letter of credit, you either can do 90 days or 180 days. I don't know who make the rules, but that's the rules. The banks all use that 90 days and the 180 days. They are the two options for you. So a lot of you might heard about the letter of credit, but never really see it, how it look like. So I'm going to show you how a LC look like. So I copied a page of the letter of credit to share with you here, so you can see on the screen. So this is how a letter of credit look like. This is only one page. Actually, it have 4 pages, or sometimes even 5 pages. Depends on the terms or what you on your contract. So this is the letter of credit. If you sell something to, for example, to China, the buyers in China is going to send you a letter of credit. This is what you're going to receive. I mean, your bank is going to receive. You're going to got a copy. So basically, it covers like who is the seller, right? Is the applicant. Is your buyer. The beneficiary is the seller, and who is buying what, and also tell you the currency, and also tell you the percentage of the credit amount, and also tell you the payment. See here at the bottom at side. So that is the LC as that means. If you have LC 90 days, TLC 90 days or 180 days. So these are the LC, how it look like. It will be covered all the contents which you negotiate with your buyers and which you are writing on the sales contract. So basically, these are all kind of the terms, how you need to do your product, how you need to sell it, how you need to prepare your documents in order to get paid. It also gives you a amount of the money you're going to receive under the LC. And normally they have a tolerance because you might ship less amount. So LC is flexible to adjust, right? And then they also have a list of the documents which you need to present to your bank in order to get paid. So if you have some spelling mistakes or you are not shipping on time, so that will be created like a discrepancy on the LC, means what you are preparing is different than the LC size. So there are two ways you can handle it. Either you talk to your buyer, let them accept it, or you can amend it the LC. You send amendment to the bank to amend. Not you, like your buyer, will send amendment to their bank and to amend the LC. So while your business is going on, you may have these problems in the future. So we will talk about more if you have questions later on. And then just feel free to reach me or Tom out if you have questions later. Let's go back to the payment methods. So we talked about the LC already. So now we are going to the document collections, or you call the document payment. How this works is you get all the documents ready, like you sell, for example, like a toys from Arizona to Korea. So on the sales contract, you mention the whole list of documents you need to give to the buyer. So commercial invoice, packing list, insurance, certificate of insurance, certificate of analysis, all kind of documents. So you get all your documents ready, and then you send it, you entrust this whole document to your bank. So what is going to happen is that once your bank gets this set of documents, they are going to contact the buyer's bank, said, hey, I'm going to present this document for you to collecting money from this A and B, like your buyer. So your bank is going to prepare a cover of letter and send it together with a set of documents to your buyer's bank for payment. So what your buyer's bank is going to do, like once they got the documents, they will keep the documents by themselves. Like they will send a letter to the buyer that, hey, I received a document for you, please pay it. So there's a certain time limited for this kind of document presentation, like 30 days. If after 30 days they are not going to pay you, then document will send back to you. So the good thing for the document collection, like you call it either DC or DP, is that you will not lose the control of the goods. The bank will guarantee you that if you're not getting paid, the documents will send back to you. However, the purpose for the business is to get payment. The purpose is not the bank holding the documents for you, right? So is there a risk? Yes, there's a risk. You will not lose the control for the goods, but there's a risk you will not get paid. Then you might need to find a new buyer, and then or you transfer the business to someone else. I mean, there's all kinds of things you can go afterwards, but this is a payment, I would say like a middle risk. You will not lose control of the goods. However, there's a risk your buyer is not going to pay you. Okay, the next one is a cash against a copy of documents. So this is similar to DC or DP. You get all the documents ready in your hands, you scan it, and you send an email to your buyer, say, hey, your documents ready, please pay me. So this is I will say, if you have a good buyers and you trust each other and the buyer has a good reputation, this is the most fast way of getting paid compared to LC or document payment. Because once your document ready, you just scan it. It takes you like 5 minutes, and you send the email to your buyer. So your buyer can can review the documents and tell you, hey, I accept the document. They can go to the bank, just wire the money to you by TT. So once you get the pay, once you get the payment in your bank account, you just send the document by like FedEx, UPS to your buyer. So there's a risk for these payments that, yeah, you have to control the goods because you have the documents in your own hands. You even not give the document to your bank. So the risk that the same as DP, your buyer may not pay you. Another risk is that when you're sending documents to your buyer, if something happens to the courier company like a FedEx or maybe UPS, they may lose their document. Then you need to contact shipping company to redo the documents, everything. So it's more complicated if they lose documents, but that is very, very rare. It's maybe 0.1%, but there's still a chance the courier company might lose their document or the document not sent on time. Like, FedEx might misplace their document somewhere, and your buyer not getting documents for like maybe 15 to 20 days. So there is a risk for this kind of payment, but I will say more risk for your buyer side than your side if they paid. So but this is the faster way you can get paid compared to letter of credit and the DP. So the next method of payment is the open account. So open account works like you ship the documents, you ship the product to your buyer in other country, and they will pay you 30 days or 6 days or 90 days after they receive the product. Of course, this is very attractive to your buyers, and this will help you make a lot more sales overseas. However, if your partner in overseas in another country is not really reliable, you probably lost all the money. What if they get the product not paying you at all? So this is a very often happens between the companies who have a subsidiary company in other country. For example, you are a car company, and then you have a subsidiary company which is under your own control, and you export some part of a car to the other country, and then you give them payment term. So I would say that is more safe if you're doing that way. And then the next thing, what you need to do is that make sure you have the contract written very clearly when they need to pay you, how they need to pay you. It's like you need to protect yourself by saying something like, once the product arrived, you have to pay me no matter what, no matter you sell or not, no matter there's a quality problem or not. There's another procedure you can go through the quality claim, but you have to pay me. So the open account, I'm not suggesting any starters, like export starters, to use this open account unless, like I said, you have subsidiary company there, or you relatives there, or you have family members who you can trust. You can do it this way. Otherwise, I'm not recommending anybody who just start doing export to use this method, because there's a very big risk you are not getting paid. So the next one, consignment. Consignment is I won't see it actually as a payment method, but however, like the American official government see this is as a payment method, because to me this is a more like a strategy partner thing. So you want to sell something to overseas, you are finding a partner, same as an open account, but this is even take longer than open account, because this is something like your business partner in overseas, they will only pay you after they sold the product. So this is even dragging the payment period longer compared to open accounts. And also you have a risk that the product won't be sold, so you will never get paid. So I would say this is more strategy partner thing than just a method of payment. However, I just want you to know if you are looking for a long-term cooperation or your product is really have a hard time to go overseas unless you have this kind of, I would say negotiation, this kind of base work being worked out between you and your partner, then it's not a good option. So in general, I will say this is probably work for the big companies who have strategy partners, and for the small business owners who just started doing export, the number 5 and the number 6 are not a good payment method for you to choose. So you can see from the right hand side, I put the risk arrow here. So as an exporter, most safely is cash in advance, and that is also the least attractive way of selling stuff. You know, people have to pay you 100% in advance. And then the next one, less risk, as a credit, a letter of credit, because LC is a guarantee is between the banks, like the buyer's bank is giving a guarantee on behalf of the buyer to your bank. So as long as you prepare the document, present the documents as showing on letter of credit, you will get paid. So the next one is the DC or DP and the cash against the copy of document. So as an exporter, so the least risk one is cash in advance, LC, and the highest risk consignment. And of course, as an importer, you probably want to do another way around, right? So if you import something from overseas, you try to pay the latest that you can, and then you try to pay the least amount in advance you can. So if you are the importer from other country to America, you probably want to say, hey, I'm going to have an open account for you. I'm a good credit company. Just send your product to me. I'll pay you later, right? The least that you can do like a cash against document. Once they pay, they ship the document product to you, and they represent the document, present the document to you, and then you start paying that. Okay, so this is the method of payment, which is popular or well known for international trade business. So this is the LC example I just showed you earlier. So now we are talking about the payment terms. So these are the payment terms which is commonly used in international trade. For example, you can do like 10% in advance and plus 90% doing LC, or you're doing DC or DP or cash against document. These are the common payment terms. So either you do 10% or 20, 10% or 90% or 20, 80, 30, 70. That is under your own control. Like it's kind of like negotiable. You can talk to your buyers and to see how it goes, right? If you're exporting something, you want them to pay you as much as they can in advance, right? You want to do maybe 50% cash in advance, 50% like doing LC or doing DP. And then letter of credit. So if we talk about letter of credit, like the letter of credit is the only payment you're going to use, we are talking about 100%. Nobody go, like unless like you choose like number 1, 10% in advance, 90% LC, right? If you choose 100% of letter of credit as a payment, the only option for you is doing a letter of credit aside. Letter of credit aside it means like you're exporting something and you have the document, present to the bank, to your own bank. Your bank is going to send it to the buyer's bank, and once the buyer's bank has it, they have to pay you like in 10 days or like 9 business days. Oh, sorry, it's 10 days, 7 business days, something like that. So that is named letter of credit at site. So they won't drag very long. As soon as you present the documents to the bank, you get paid. The 90 days, how the 90 days counts is they started from date bill of lading, bill of lading days. Like you ship something, you wear like a vessel, or you wear airplane, you will have a bill of lading. So the date is that departure date or onboard date. That is the date started count. It's 90 days after that bill of lading date, they have to pay you, or they have to pay you 180 days after the bill of lading date. So that is the letter of credit. So means your buyer will pay you 90 days after bill of lading days. And then normally, as a seller, you can charge interest on top of it. Like, hey, I'm not going to finance you for nothing, especially now all the interest rates getting like increased right now, getting more expensive for you. So you can charge the interest to your buyer. You can tell them, hey, I can do like a later LC 90 days, but the 90 days, I'm going to charge you an interest, maybe like 10% per year, something like that. The annual interest rate like 10%, and then you charge them 90 days or 180 days. This is used to be very, very attractive way of doing business for Americans when the interest rate is low, like you have like 0.5% or 1%, and then the other country have 9%. They really want to pay you LC 90 days. And they said, oh, even I pay your interest, you charge me like 1%, 2%. It's much lower than my own country. But at this moment, I'm not so sure anymore because the interest rates are getting more expensive here. So I would say less attractive to the buyers from other countries to choose like a long-term payment. So the next one is the document collection. So it's the same thing, like a document collection or document payment. It's if you don't have anything otherwise, it's 100%. Like you send a document to the bank, you get it paid, right? So this is the payment term. So when you negotiate your sales price, you need to make sure write down how much you're doing, what kind of type of payment. The next one is like a 50% cash in advance, 50% like open account. Or you can do like 70% in 70% cash in advance, 30% open account. So again, so the more money you get in advance, the less risk you have, right? So if you can negotiate with your buyers, try to get as much as you can, let them to pay you advance. So for this type of terms, you are risking the percentage, like the open account percentage. However, giving them a little bit, I would say space to doing the open account, and I would say more people will be more appreciated doing business with you because, you know, 20% is still quite a lot of money for them. And then they also feel like you are very open or flexible for payment term, and you probably gain more buyers. So next one is the consignment. So far, what I see, Amazon is the one doing consignment. Like the overseas sellers, you are selling something. What you do is you send your product to Amazon's warehouse, but you won't get paid, right? They are holding for you, and Amazon will sell it for you on their website. Once they sell it, you will get paid. So this is exactly the same as they are doing consignment. However, Amazon has a good reputation. You're not afraid you send your product to them, will be disappear, or they will lose it, or you won't get paid after your product being sold. However, whoever use Amazon understand that they are charging quite a amount of money to doing this kind of service. So maybe not every single product is suitable to use Amazon. However, the way Amazon doing it is a consignment, like a Chinese seller try to sell a massage chair to America. What they do is they send their product to Amazon's Arizona warehouse and just leave there, and until they sold, they get paid. The same thing applies to America sellers. If you want to sell something to Singapore, you send it to Amazon Singapore's warehouse and let until it is sold, and you get paid. Okay, so these are the terms which is you can use for international payment. And as I said, all the percentage are negotiable. You can talk to your seller or your buyers to negotiate the percentages. So the higher the percentage of the advance payment you get, is the most secure to your business. Just make sure you remember this. So while we are talking about the payment, there's one of the program from the government I want to share with you is this one. So the Export and Import Bank of the United States, they have a export credit insurance. So what does this insurance do? They are helping American exporters to secure their payment. So the benefits for this insurance is this. So the insurance will reduce the risk of a loss of cash income from export sales. Means like you sell something to overseas buyers, if they are not paying you, the insurance will pay you. Of course, if you qualified for the insurance, so you will get paid from this insurance. It's up to maybe 85%. That's what I read online. Okay. So the export credit insurance allows exporters to provide qualified international buyers with advantage terms of credit. Means like if you are selling to a reputable buyer and the insurance said, hey, I'm going to cover you, then you can do like an open account with the buyers. And if something happens to that buyer, and the insurance is going to pay you, right? So also this insurance is going to release some cash flow for you. Like the insurance will guarantee the payment, and you can go to the insurance to say, hey, I have a account receivable from this this is the buyers ABC, but they are not able to pay me until the 90 days from now, but I need cash. So the insurance will transfer the account receivables, this is the account receivables into cash to you in this country. So it will be release your cash flow pressure. So this is a lot of benefits for the company who has a tight cash flow. If you are using this program or this insurance, will help you to do more turnovers, right? You can rotating more of your business. So the next one is like, as long as the export and import banks cover that region, like if the country was covered by the export import bank, and you can feel free to do business. To me, they are open the new markets for you. There's some country you don't know the buyer at all, or you don't know if the buyer is reliable or not. The export and the Exim Bank, like Export Import Bank, will help you when you can apply to them, said, hey, I want to cover this buyer in this country. They will do a background check for you. They will do a credit check for you. And then they say, hey, I'm going to cover you. I think this buyer have a good credit. Well, then you just feel more comfortable to sell into this buyer. It's another way to say that they are open new markets for you. So these are the benefits if you can use, if you are doing exporting, and then you can use this insurance to cover your business. So the next thing is what kind of policy they are available for you. So they have a short-term policy, like if the transaction is less than 180 days, they have a short-term policy for you. They also have mid-term coverage, which is covers up to 85% of contract value. So, and then protects amount under $10 million and up to 5 years. How this works, like you have a long-term business with a company, like rotating business, like every year you are doing something, or you have rotating business. Like for example, this year I'm going to sell some corn, American corn to this company, to a feed industry in Japan. And every year they are buying worth $2 million. I have a long-term contract with them. In total, it's 10 million, but that is going to deliver in the next 5 years. Each year, 2 million worth of corn. So you join this middle term insurance, and they're going to cover it for you. Okay. Or you can do like a single buyer policy, or this words like what this mean to you is like I only have one buyer in one country. You can do that. Or you can do a multiple buyer policy, like for example, I'm very focused on China as my main market. I have like 20-30 buyers there. Then you can buy a umbrella policy or cover the multiple buyers. You just give each buyer's name to export and import bank. They can write it into your policy and with the total amount. So by doing that, it will be save you a lot of time for each buyers you're going to apply. So all these policies are available with the export and import bank. And both Tom and I have a good contact with the Exim Bank. So if you have questions with their policy, or if you want to connect with them and then checking furthermore how this policy works, please feel free to contact us. We will be the contact person for you to make sure you get the right policy if you need it. So this is all today's webinars. And if you have any questions, please feel free to put in the Q&A, and then Tom.
I don't see anything in the Q&A at the moment. And for those of you online, our chat was set up a little incorrectly. So we will include Faith's contact information for you and later, because it did not go to everybody. Or Carol, perhaps you're able to copy Faith's contact information in a chat to attendees, because right now it only went to host and panelists. So excuse me. So are there any questions out there from anybody? I don't see anything in Q&A. No, doesn't look like it. So you can go ahead to the next slide. So this is the contact information for Carol and I, and I said we'll include Faith in there for you as well, and Roberts is already there. And Faith, you did a great job talking about ACA, but ACA has other programs as well. I know I've been working with your film office, because coming next year, probably in the third quarter, there'll be a lot of incentives around film, specifically for building brick and mortar and things like that. So there's a lot of other exciting developments. I'm also working with someone in your infrastructure team. I know there's an upcoming conference where your infrastructure team is going to be talking with the ADOT infrastructure team to small businesses about the electric vehicle infrastructure and other infrastructure changes, as well as broadband, which have been huge. So there's a lot of activity out there for small businesses. Excuse me. So I encourage you to please participate and reach out to us and ACA both. And thank you for joining us today. There will be an evaluation received.
Just one moment. I see a question there.
Oh,
Tom.
You're right. A question came in. Do we have a boilerplate purchase spec for international sales, Carol?
What that means?
Boilerplate. Yeah, boilerplate means a template, something they can just use and drop in. I think the answer is probably no, but we can certainly secure some different samples because they do vary by industry.
Oh, they want the specifications for boilerplate.
For just a template, boilerplate just means a template. So they're a template, whatever they're selling is a template they could use for purchase specifications? And I think the answer is it varies much by industry and the type of thing that's being exported. So.
Well, what I can do is that I can share with you, if later on you can contact me, I can share with you some purchase contract which I handled to give you as an example, if that helps. So I mean, hope that you can use as a template. Like we don't have template, but I can give you some examples you can use as a reference.
Perfect. Thank you. All right, so I'll watch for another question to come in. I don't see one yet. So with that, when you leave, please, you will get a survey for complete evaluation end of the program, and we'll follow up with making this information available. The webinar will be available online, and certainly look online for additional programs coming from the SBDC, and certainly join the Small Business Bootcamp and look online for some of those programs coming from Arizona Commerce Authority. Thank you for joining us today.
Thank you. Bye.
Thank you.